Welcome to this market and economic update. Moody's, one of the three main credit rating agencies, recently downgraded the U.S. credit rating, marking the official end to America's top-tier credit status. This follows similar actions by Fitch in 2023 and Standard & Poor's back in 2011. Why am I telling you this? Well, this decision reflects growing concerns about America's fiscal trajectory as the national debt continues to expand. The timing is particularly notable as Congress debates a new budget bill that could potentially increase annual deficits, highlighting the tension between revenue constraints and government spending. Now, over the next few minutes, I'm going to talk to you about this fiscal uncertainty and what it could mean for investors in your portfolio. Stick with me. First, as this chart shows, the federal debt has been rising over the past decade relative to GDP. It's relevant to compare debt with GDP because what matters is whether the economy can actually support the current levels of debt. Throughout history, budget negotiations in Washington have created periods of market volatility and uncertainty. As citizens of the world, as people, it's natural for us to be concerned about our nation's fiscal path with growing deficits and limited solutions in sight. However, when it comes to your investments in your portfolio, perspective does matter. Over the past 15 years, we've seen multiple fiscal standoffs create volatility. We've seen it in 2011. We also seen it due to government shutdowns in 2018 and 2019. Yet in each case, the markets eventually stabilized and recovered. Rather than reacting to Washington headlines, as we all are doing, history suggests maintaining a disciplined approach to focus on long-term is the best way to achieve your financial goals. Easier said than done, I know. But this is why we're here to guide you and continue to show you the data and the facts so that you can keep well informed about what's going on. Next, it is likely that key provisions of the Tax Cuts and Jobs Act will be extended with the tax bill currently working its way through Congress. The current proposal aims to provide economic stability by providing a potential tax cliff, where rates would suddenly revert to higher levels from before the TCJ Act was enacted. So for individuals, the proposal would make the 37% top tax rate permanent, increase the child tax credit to $2,500 through 2028, and potentially raise the controversial SALT deduction cap from $10,000 to $30,000. Additionally, businesses would benefit from an increased pass-through deduction rising from 20 to 23%, reinstated 100% bonus depreciation for qualified assets, and restored research and development tax deductions. Please keep in mind that this is all subject to change as the bill makes its way through the House and then the Senate, but this is what we currently have. This chart shows that despite efforts to control government spending, federal budget deficits continue to add to the national debt. The latest budget proposal includes approximately $1.6 trillion in spending cuts through changes primarily to social programs, some of whom I know personally whom were affected. But these cuts are even outweighed by tax reductions and increased spending elsewhere. The current proposed bill is estimated to add another $3 trillion to the national debt over the next decade. This comes as our current debt already exceeds, you guessed it, $36 trillion. This is equivalent to about $106,000 for every American, to give you some context and reference there. Nevertheless, history suggests that the most prudent approach for investors is to stay invested and maintain a disciplined approach, long-term financial strategy, because the markets over the long period do prevail. My name is Dominique Vitalis. I'm your Senior Relationship Manager here at Carson Wealth Franklin Lakes. I hope you found these insights helpful. If you would like to discuss the tax bill, national debt, your financial plan, or your investment strategy in more detail, please don't hesitate to reach out. We look forward to speaking with you. Thank you.